So here I am in another hotel room, this time off Central Park. And a couple of days since the last post about gold. And this time the post is about silver, because silver is running. Now, how far could it run is really the question. Now, yesterday, Trump made the most incredible tweet, basically saying that Xi and Putin and Kim Jong-un were all sat around conspiring against America. And I mean, gold is for war. And when you have that sort of statement, how can you not buy more? And actually, I bought quite a lot of silver yesterday, because silver is now the fast horse, and silver is $40 an ounce. And I can't help but say silver is going to $100 an ounce. I'm probably wrong, but that's what I've got securely in my head, that if this carries on, this saber rattling, if you want to be kind, then gold is going to go to 4,000 to 5,000, and silver was going to go to $100 an ounce. Now, you've got to do your own research. This is not advice, this is my opinion, and I have those positions that reflect that opinion. Now, if you actually look at the chart of gold and silver over time, you will see that silver has been running behind gold over the last, say, 15 years. And then if you look at the last, say, 10, you'll see that it's tracking, but there was a big reprice, I think it was 2020, when silver just went bang, vertical, and kind of caught up. And it's been trying to catch up ever since, and it's been tracking, as you'd expect, silver tracks gold. But actually, if you take the big picture, silver is running quite a lot behind gold. And, at this rate, well, even now, it should kind of be around the $60 mark, not $40. So what is the dynamic? Well, obviously, gold and silver go back in time a long way as money. And back in the really early period, it was 5 to 1. And then it went to 10 to 1 during the Roman period, and then went to 15 to 1, and then went to 20 to 1. And now it's not even 100 to 1, is it? So 40, let's call it 70 or 80 to 1. Which is why if gold goes to 5,000 or more, it can easily go to $100. But there's another thing, and when I think about this, I don't really understand it, but I put it out because it's an obvious thing to think about. Now, every year they mine 3,200, these are all round numbers, gold per year. Okay. Silver, 25,000 tons. So that's 8 times as much. Well, gold is not 8 times the price of silver, far from it. So with precious metals on a run because of demand, because of this geopolitical dynamic, silver has a lot of room to maneuver because of the following idea. Now, gold is running because governments are buying it. Gold is a governmental thing because gold is cash money that you cash. You put in a pot and you bury it in the corner of your house in the good old days. Silver is purse money. It's what you do transactions in, probably medium size and small transactions, or smallish transactions, but not real small transactions. That's done in copper. Yeah. So silver is a B2C, business to consumer asset. Gold is a B2G, business to government asset. And a few years ago, basically governments had lost interest. Peace was being given a chance, and they didn't need to have warehouses full of gold just in case there was a war. So gold was a B2C, silver was a B2C. Now, gold is back as being a business to government, but silver is still a B2C. So when gold has run, people have been looking at silver and going, hold on a minute, this should run. Oh, I'm going to buy some. So now the business to consumers, the B2C, the retail asset buyers are buying silver. Now, the thing about retail is when it's sleepy, it's sleepy. But when it gets going, it's a juggernaut. So now the retail market is interested in precious metals. They look at gold and go, oh, that's a bit steep. And they look at silver and go, oh, I can have a sack of that. And the retail investor is engaging in silver, and that's why it's beginning to move. Well, if that becomes a global thing, with the whole world retail investor market piling into not only some gold, but also silver, silver is going to be the fast horse. And so the upside on silver is actually more than gold, and could be a lot more than gold. So you could easily see that silver runs away with it. And in the past, that has been the cycle. When retail gets, its wind up, it piles into silver and silver rockets. Gold, not so much. So with gold actually driving the bus and with retail catching on, silver is the place that I feel I need to build a bigger position in rather than gold. So, but overall, I've got gold, I've got platinum, I've got palladium, and in the last couple of days, a lot more silver. So there's my thoughts. Silver is now the fast horse. It's got some catching up to do with gold. Gold is probably going to do a big run up to over 4,000, maybe towards 5,000 in the not too distant future if this geopolitical insanity continues. And silver will follow, and I think it will run beyond the position that gold gets to over the next 6 or 9 months. And for me, I just can't see any other direction for precious metals than up. So that's my positioning. Anyway, thanks for watching. Hope you enjoyed my ideas. As I said, this is just raw material for your own thought process. It's not advice. But you have to look at all the facts. You have to get your plan together. You have to get your theory and then check to see whether what happens next fits what your thinking is. And as you can probably tell if you've seen more than a few things from me in the recent times, what I say then seems to happen. And hopefully at some point sanity will break out. But for now, doesn't seem to be any chance of that. So, precious metals is one of those places to be. See you soon. Bye now.